Hello, welcome to the Stock Play of the Day Overtime Edition. This week on the Stock Play of the Day, this Monday, we talked about XLF. That is the ETF that tracks the financial sector. We'll discuss, did we score or did we fumble? Hello, everyone. My name is Brian Overby. I am the Senior Options Analyst for Ally Invest, and welcome to this overtime edition of the Stock Play of the Day. This is where we review the trade that we talked about this previous Monday on the Stock Play of the Day. That actually gets videoed every Monday at noon Eastern Time, and we were looking at the XLF. So what I have highlighted here on my chart is a 5-day graph of the XLF. And I have drawn, I've drawn a segment across the screen that basically is noontime when we talked or discussed the trade that we were looking at in the XLF. At that point in time, it was trading around 23.78. That's approximately where it was at. It's a real-time show, so the stock is moving just like it is right now. And we looked at a short put spread. So this is the Ally Invest Options Playbook, optionsplaybook.com. And this is what a short put spread does. We talked about it on the show saying that, well, the financial sector has kind of been trading in limbo, where a lot of the other markets have either decided they're going to go way up after the big push down from the coronavirus pandemic, or they were going to go way down because of the coronavirus pandemic. The financials made a little bit of the way back, but then they've kind of now been kind of choppy the way that they've been trading. So it was more of a fear of missing out trade in that we'll sell this put spread and we'll say, in general, we're bullish to neutral on the marketplace, but if the market comes down, we would be willing to buy some shares of the XLF and remain and hold it long. Okay, so if we look at the chart, after the show, or basically by the end of the day, the stock was pretty much flat. This is a 15-minute chart. So this is the end of Monday, and then they had a gap opening on Tuesday. So looking fairly good at that point in time, right? In that the market had gone up, and we're getting some time decay. We're creating a trade where time is our friend overall. But as we talked about on the show, our goal was we'd like the underlying stock to come down, and we talked about having enough cash to be able to buy 100 shares if the stock was put to us. So I don't know if this was good or bad overall, but in general, if that really was our forecast and what we were looking at on our paper trade, we did have a big gap up on Tuesday, but we had a big gap down on Wednesday. And now we've actually even had more of a gap down. And right now it's trading right in between our strikes. So let's review the trade and let's talk about some things that we might want to consider going forward on our paper trade. Now, as always, this is not meant to be a recommendation. We're just here trying to learn on Stock Play of the Day overtime. But in general, if we looked at the trade, here's what we have. Okay, this is the Ally Invest option chains. We see the underlying stock trading at 22.73 right now. It's down almost 4% today, 86 cents. So a fairly decent move to the downside on an ETF overall, which is not as volatile as usually the underlyings that it holds. And on the right-hand side, we have puts. On the left-hand side, we have calls. We obviously were dealing with puts with our short put spread. And we see that at 22.73, that means that our 23 strike put is currently in the money. So on the position, we are down. But if we were taking it with the goal of, well, if it comes down to 23, by that expiration date, we would be willing to buy shares of the XLF. That means that we'd be paying $23 for 100 shares. We would need $2,300 in order to purchase that underlying stock if it was put to us. We're actually not 100% down on it, though, because when we first did the trade, Here is the trade in the option strategy workbench. We see it's trading for about 70 cents right now. But when we did the trade, we received about 45 cents. So if you take 23 and you subtract 45 from that, that means that the actual cost basis to buy the stock, if it was put to us, would be $22.55, which is actually lower than where it's currently trading. So bottom line is we're still okay on this trade. Right now, the question that would come up more than likely, and I might have a lot of people thinking this question, well, when might we be assigned on this short put? Would it happen closer to expiration, or could I wake up tomorrow and I've already bought that 100 shares of the XLF at expiration? And the answer is you can be assigned at any point in time, but more than likely you will not be assigned until closer to the expiration date. Why? Because if somebody owned a put option right now and they wanted to sell it, they're going to get more money by selling it in the marketplace than by exercising, in that there's still a lot of time premium in this put. The stock's at 22.71 and the 23 strike put is trading for $1.03 by $1.06. That means that we still have, it's more beneficial to actually sell the option than to exercise and buy the underlying stock. Now, with that said, we're dealing with humans. Humans don't always do exactly what is the most likely scenario. So just always keep that in mind. We got a human element. But in general, the odds of being assigned would be closer to the expiration date as opposed to further away. We still have 21 days available on this option contract. When we started, that meant on Monday, we had 25 days. So how could I approach this overall? If I'm looking at this trade right now, and I was planning on buying the underlying stock, fear of missing out. If the stock came down, I'm willing to buy it, or I should say the ETF, then this is okay. There's nothing wrong with this trade. You just let the trade play out and you just continue on, and hopefully you get the chance to buy it at this strike price. It doesn't come back. Now, if you were speculating on the trade and you didn't really intend to buy it, you were just trying to collect the time premium that was in the short put spread, well, I would give myself a little bit of room here, and then I would just think about closing it out. In that, what I mean by a little bit of room, let me go in and put the trade in the right rail of the Ally Invest option trading platform, is we could have made about 44 cents was where the midpoint was at when we were looking at the paper trade on Monday. Normally, if we could make 45 cents by selling it for a net credit, the most that I'd want to lose on the trade would be 45 cents. Well, right now we see the midpoint trading at 70 cents. So that's not quite the maximum that we could have made on the trade, right? It would have to trade for 90 cents for us to be down 45 cents on the trade. So you might want to still let this run, but I would be very cautious if I was just looking to close out this trade. I didn't want to lose the maximum, which would be $2 on the trade, minus the 45 cents that we received. That would be the maximum I could lose. If I was just purely speculating on the trade, this is how I would approach it. If I saw this trading for around 90 cents, I would look to close out the position. So how do I close it out? Well, here was a buy to open. What we'd look to do is then sell to close the leg that was bought. And then the leg that was sold, we would buy to close. And you'll see here, now the midpoint changes to a debit, DB stands for debit, of 70 cents, as opposed to a credit. And that's how I would look to close a position. I'd say, well, I'm going to keep a close eye on this. When this gets to 90 cents, I'm going to put in an order to buy to close this spread. Now, hopefully it doesn't get to that 90-cent level, right? We don't want it to get to that downside, but I would just be watching it. And if I was purely speculating on the trade, that's how I would approach it. All right, that's it for this episode of the Stock Play of the Day Overtime. Make sure you click subscribe and ring the bell, and I will see you this Monday at noon Eastern Time on the Ally Invest YouTube channel.